Hey, this is Matt from InvestiQuant. Today is Friday, September 30, 2022. Today is the last trading day of the month. It has been a bearish month. We are trading down below last month's low, last month's closing price. We are at the lows of the year here. And what we'll be looking at this morning is what has happened historically on the last trading day of the month when you have a weak down month forming. So I've got all four instruments selected here. The setup is based upon entering long at 9:30 a.m. Eastern Time and exiting at 4:15 p.m. Eastern Time. Now, currently the overnight session is lifting. We are trading above the closing price from yesterday. I'm going to add that to the test here, going to get gap up from the gap direction here. And the next thing I'm going to do is add a little bit of context around what has happened this month. And currently we are trading below the prior month closing price. I'm going to add that to the test by going to the active today and looking at the location of the last close and saying that the close was below prior month close. So I've added that. Next thing I want to do is go to the indicators library, say that we close below a 200-day simple moving average. And then lastly, I'm going to go to the calendar library. And I'm going to point out that today is the last trading day of the month. That is in the active today section, and it comes from our unique days. All right, now I can click view results. All right, here we go. These are the results based upon entering the market long at 9:30 a.m. Eastern Time and exiting at 4:15 p.m. Eastern Time when you are gapping up on the last trading day of the month and the prior day closed below the prior month close and below a 200-day simple moving average. Historically, we have 20 samples in the S&P. We've got 16 in the NASDAQ, 18 in the Dow, 18 in the Russell. If we look at the win rates on them, they are mostly skewed higher. S&P coming in 60% of these have closed above the opening print. The NASDAQ stronger at 69%. The Dow 61%. The Russell 44%. If we look at the average moves, the average move to the upside in the S&P is larger than the average move to the downside. That is also the case in the NASDAQ, in the Dow, and then the Russell is pretty similar in size. So historically speaking, this pattern has been a little bit more favorable towards the bulls when gapping up on the last trading day of the month with a weaker month forming. Hopefully you found that helpful. Good luck today. We will see you next time.